Time now to take a look back at the day in finance with our regular money man, Scott Phillips, Chief Investment Officer at the Motley. Good evening, Scott. Let's start with some concerning findings from a new Roy Morgan report showing a record number of Australians at risk of mortgage stress.
Jane, good evening. Yeah, not great news at all. 1.6 million people, according to the Roy Morgan research, are in mortgage stress currently. We know prices keep going up. We know interest rates have gone up a lot over the past couple of years. The data they're seeing suggests that more than ever, we are in significant mortgage stress, and it's going to be a very tough year for many people.
Not good at all. Now, we've also heard Coles has handed down a weaker profit today. Can you talk us through that and what it could mean for shoppers ultimately?
Coles profits were down today despite sales increases, and that's been the story of the last couple of weeks on corporate earnings. We know growth is hard to come by and expenses continue to go up. The good news, if there is any for shoppers, is Coles' margins actually decreased. So despite concerns and some allegations of price gouging, if anything, it seems like Coles isn't making as much as they used to per dollar we're spending in their stores.
Okay, and Optus appears to be making cuts to its staff. What impact will this have on the telco?
This is a tough one because apparently the reports are they're sacking 200 people. That's on the back of ANZ only last week or the week before saying they were going to get rid of some people. It is going to be the story of 2024, unfortunately. This is in their smart home installation business, a new business they started up trying to get more people to put more smart devices in their homes and, of course, use Optus to do so. Hopefully it doesn't spread any further than this. But a real concern, I think, not only for Optus customers, but maybe more for the economy. If businesses can't find growth, they're going to look for cost cutting. And unfortunately, staff for many companies are the biggest component of those costs.
A concern indeed. And speaking of the economy, we're also waiting on key inflation data. What are we expecting there?
I wish I had better news for you, Jane. This has not been a particularly good news segment. We're expecting inflation to tick up a little bit, unfortunately. The January inflation numbers are due out tomorrow. Now, the last quarterly inflation number we got was 4.1%, but the last monthly number for December was 3.4%. So it was coming down quite nicely. Economists are expecting that'll tick up a little bit from 3.4 to 3.6. Still lower than the quarterly number, so that's still positive, but maybe a reminder that unfortunately we're not through the inflation pain just yet.
Okay, we'll be watching it closely. And just before we let you go, how are things shaping up on Wall Street?
Not much of a lead, unfortunately, for the S&P 500. The futures at the moment are dead flat. We'll have to wait and see what happens there overnight.
Okay, thank you, Scott. And thanks again for breaking it all down for us on Late News.
My pleasure. Thank you, Jane.